Welcome back to a quick intraday update. Right now I have this chart of Bank Nifty and this is a 30-minute chart of the index. And a few days ago I had forecasted of the wave C, which might extend on the higher side, and this is how it has turned out to be. If I take a Fibonacci projection and calculate the length of wave A and add it up to the length of wave C, I get a level which is somewhere around 40,600. Yeah, 40,600. And if I take a parallel channel, I have attached the lows of wave C and wave B and joint it up to the high of wave A. I get a level of the parallel channel resistance which is somewhere near to the Fibonacci projections that we had done, wherein A is equal to C. So if this is true, then we might expect the wave X to terminate over 40,600 to 700 levels, and to see the reversal on the downside, we should not expect the Bank Nifty index to go higher above this trend line, the resistance trend line. So if in case it goes higher above this resistance trend line, it's a sign that we are not going down, but the wave C of X or wave X on a higher degree is just extending on the higher side. Well, the problem here is, so if you look at the price action data from 15 September to the low of around 40,500, you would have noticed that this whole rally is a 5-leg down move. And so at any given point of time in the formation of wave C, you would have expected that the high which we made at the top, which is around 41,800, so at any given point of time you would not expect the high of 41,800 to break, and thus you would expect that the down move to start on the downside, since this is a 5-legged move on the downside. But we have not got a 5-wave decline from 15 September to the low of 30th September. So in case we would have got a 5-wave decline, say for example 1 2 3 4 5, then possibly it would have been way easier for me to conclude that this is ABC, it is over, and then possibly we are going below 37,000 as well. So that would have made my work more easier, and it would have just been very much easier to forecast. But now, since we do not have a 5-wave decline, what we have is a 3-wave decline. We just don't know what the formation of X wave will be. So is it going to be just a ABC or a series of ABC, X ABC, or is it just going to go to the all-time high again towards 41,000 levels? So we just don't really know. And when you don't know, and when there's not much clarity about the termination of such counter trend bounces, what you would expect is not to be short at any given point of time in the market, wherein you don't actually know what is going to be the exit point for your shorts. And thus we'll just wait till it actually reverses on the downside. So the 20 EMA is a short-term sign that the markets are reversing, but a 40 EMA would be, a 50 EMA would be more prudent to look at. So the level for 50 EMA is around 39,639. And if I take a look at the Nifty index, the Nifty index has now closed above the previous counter trend bounce of wave A, which was high was around 17,428. So if this is A, B, and in the wave C we have formed A, B, then possibly we are currently in a wave C. So this is the wave C, and if I take a parallel channel to measure the extent of the rise which it could see, the resistance which I see from the parallel channel comes around 17,600. So this is precisely the levels which I'm looking at, and as I discussed in Bank Nifty as well, this whole rally is a 3-wave rally. So we don't really have much evidence to say whether after the wave ABC is wave ABC, after the end of X wave, are we really going to fall or not. But what I would say is this is not the time to go short in the markets, wherein you actually don't know where are you going to exit. So the 20 EMA and the 50 EMA are the key levels. So the 50 EMA is around 17,300, roughly 190 points lower from here, and the 20 EMA for the short term, for gauging the short term movements, is around roughly around 17,400. So that's precisely 90 points lower from here. So let's see what the market has in books for us. Thank you.